So the big question we're asking tonight is this the right time to buy, and will we see more investments in the year 2016? My colleague Rukmani Krishna has been going through a few reports on that count, and take a look at what she's found.
The capital markets may have gone into a tailspin, but the outlook is rosy for real estate. Let me tell you why. Well, if we take a look at the macro environment, the RBI in its recent policy pressed the pause button, but was very clear that monetary policy will remain accommodative, meaning home loans could continue to get cheaper. A CBRE report says that the demand for industrial real estate is high, and this means that companies are investing, meaning the job cycle should start again, and that should lead to more demand for housing. The office market has been on a high through 2015, leading to demand from the white-collar workforce. Additionally, CBRE points out that India continues to remain a favored market for international players. Second, let's take a look at what the investors are saying. According to a survey of investors by RICS and JLL, the big boys are betting big on the Mumbai, Bengaluru and Pune markets, and they will be putting their money on mid-income housing, office space and office ITES spaces. The report says that investors expect home sales to pick up in 2016. They also anticipate more successful exits from their investments. And the other big finding here is that a majority, 71% of investors, are open to invest in equity rather than lend to developers in 2016, signaling a return of confidence in the sector's growth. And if you go by another recent report, green shoots are more visible right now. LIC's 4 hours reports for the October to December quarter finds that sales across 8 major cities in the country has improved by 7%. The key market is the Mumbai metropolitan region, which witnessed the best performance between the October to December 2015 quarter and saw a 35% rise in home sales. Close behind is the Ahmedabad, Bangalore and NCR markets. So clearly not only are investors excited about 2016, but even home buyers are coming back.
Not just investors, but home buyers as well, is the word coming in from Rukmani Krishna. And to take that forward, I have two very special gentlemen joining me here on the Urban Debate. One is Amit Goenka of Nisus Financial Services, and the other is Sunil Agarwal of RICS from New Delhi, all the way from New Delhi. Sunil Agarwal, thank you so much for taking time out to be with us here on the Urban Debate. And Amit, as always, thank you so much for being with us here in our Magicbricks Now studio. First up, gentlemen, I'm just going to throw this open with the one question that everybody would have in mind, having thrown all those numbers on the screens. Are there green shoots? Do you agree? What's your take? First, I'm going to go with Mr. Sunil Agarwal.
I think there are definitely more proposals that we see as advisors. And if you look at the kind of proposals that have hit our table in December and January, they're almost, half of what we saw in 2015. So if that is any sign of improvement, yes, we have seen a lot of traction in the advisory services space. Deals have happened in 2015. Office market has been robust, and I think when I look at 2016, the governments have yet to deliver, but there is a lot of competition among developers, and a lot of governments are showing a lot of projects which they want to finish or they get started. So UP is seeing traction, Uttarakhand we are seeing traction, we're seeing almost every government, every state government, whether in election mode or not, at least there is a lot of fillip that they want to give to the economy through these projects.
All right, let's take it across to Amit on that note. Amit, the macros. The macros, according to the CBRE report itself, seems good because, accommodative policy, be it monetary policy or otherwise, the climate is set to be better for 2016. Would you agree?
Well, I don't think the pessimism is completely out of the window. So I wouldn't be starting to already celebrate a revival of the sector.
Okay.
I think it'll be a little tad too soon to do that. Okay. But clearly one can't deny the fact that the fence sitters have actually come out of the closets. They've started to reevaluate their options, rent versus buy, lease versus buy, etc. Clearly the lease versus buy verdicts have been coming in faster, with more leases happening and even more purchasing of commercial real estate happening. Likewise for industrial real estate sector. But the home buyers remain cautious on two counts. One is that the inflation taming numbers have yet to affect the common man, which means there is money which still needs to go into the pocket of the common man. The savings yet need to go up before they can actually take that big leap of faith into buying their own homes. Clearly, the bullish attitude really comes from the policies, whether it's home loans, whether it is the general outlook of the government to bring in a regulator sooner than later, a number of things which have espoused confidence, from punishing defaulting development companies to the consumer courts also being very, very pro-buyer.
Okay.
So there has been some amount of build-up of confidence, but it's not enough to start converting all the demand to sales yet.
Okay, not enough is Amit's opening remarks, so we will question him more going forward. Sunil, on that note, I wanted to check with you. The JLL RICS survey says that private equity players are looking increasingly at equity financing and not debt financing. Now that's to put it in simple terms, it means that they have more confidence in the market going forward, aren't they?
I think there is confidence, and also the fact that the debt model, if you try and put I think there is definitely more confidence, but also if you kind of charge very high levels of debt, then it's very difficult for the developer to service in these markets. So I think these structures have also matured, and there is a relook at the private equity model which kind of went to sleep in the times of recession. But having said that, I think there is still a lot of deals which are being done in a structured manner. So there are some players who have said that yes, we will invest in private equity more. But if you look at the fine line between what has been said is that these private equity investments are with developers who have delivered, have a lot of good brand equity, and there is some sort of understanding between the funder and the developer that these are the developers who are more mature in the cycle. So private equity, yes, it's back. People are talking about it, but only very few players will have an access to private equity.
Okay, Sunil, you were talking about more proposal. What exactly is in store? Are we talking about more mid-income housing or more luxury housing? Or what exactly are we talking about over here?
So we're talking of mid-income housing, obviously, because luxury housing, I think, while there is still a short supply of real luxury housing, but still I think buyers are far and few for luxury housing. So if you look at Bangalore, you look at Delhi, you look at Mumbai, there is a trend where people are buying mid-income housing, and that mid-income would mean different income brackets in different cities, but that 70-80 lakh rupee target market, which is a 2-bedroom available at that price, and in suburbs maybe it will go to 3, that's the market which is going to be staple. And if you look at residential buyers also, they have stayed away from the market for a very long time. Prices have corrected, developers are ready to sort of sell at a cheaper price, at a more rational price. And therefore, and as Amit said, there are some punishments that the developers have got. So I think overall, there is this sentiment that we must buy. And if there's a rational buy, why not? So it is still going to be mid-income housing. However, there are two asset classes which I will observe very, very, closely. One is, we are all looking at budget. So if it is GST, then I would look at, logistics space opening up. If that opens up, then obviously it's a big investment market. And office space, obviously, because you have a lot of these corporate players who will look at India to increase their operation sizes. I think you should also look at office space. Even the small office segment in certain, heavy demographic areas, infill areas, I think will do well.
All right. I'm going to get back to Amit. Amit, I'm going to talk to you as an investor over here. That JLL RICS survey numbers we're seeing, where a majority has said that home sales will pick up in 2016. Majority have said that refinancing will end in 2016. That's a survey of investors and private equity players and foreign investors. As an investor, tell me, if refinancing is ending, if equity-based financing is increasing, what does it mean for the home buyer?
Clearly, it means that there is more long-term, more risk appetite available for the sector, for the country as a whole. Especially from an emerging markets perspective, global investors are looking at India more positively, given the huge amount of structural changes that have been brought about largely for the sector. We've heard about the Urban Development Ministry pushing for an infrastructure status, which itself will actually lead to a huge amount of confidence building for the sector, because then, a lot of the regulatory framework available to other industries will start being applied, especially from the banking and financing perspective, will be applicable to this sector as well. So clearly the government has made a huge number of taken a huge number of initiatives, whether right from Amrut to smart cities to housing for all by 2022 to actually easing up development control regulations in various parts of the country, in various states, to making approval processes much simpler, moving to auto DCR and automatic approval systems. So there is a humongous amount of activity at the administrative and at the governmental levels, which is clearly pushing the efficiencies of the sector up as a whole. And that obviously espouses the confidence of global investors to say we can now actually enter this country with a lot more confidence, with a lot more risk appetite and longer term capital.
Yes, Amit. But Amit, as an investor, what are you looking at? What kind of assets are you looking at this point in time?
So office space for me is still a little bit of a very, very idiosyncratic sector or asset class, because it's dependent very heavily still on the ITITS consumers, which have, by the way, have very limited regard for location. They're more specific on their cost of occupation, which shifts from time to time. And therefore, that makes it hard for somebody to be sticky with a particular micro market or a particular product as a whole. Whereas housing is a far more stickier asset class, as is industrial a far more sticky asset class.
Amit, I want to ask you, Sunil was just talking about how, small office space, it's a good bet, So is small office space a good bet for the retail investor at this point in time?
Small offices, yes, because small offices have, again, depends on which part of the city you're buying, because if you're going really on the outskirts where there is no infill demand, then small offices will continue to be plagued by the SMEs, by the proprietary concerns, and they may not necessarily have a very mature demand and supply scenario. But yes, in very, very infill locations, we've clearly seen that in, for example, market like Lower Parel in Mumbai, or even within Gurgaon in Delhi, or the heart of Chennai or heart of Bengaluru, where we have seen that small offices have actually started already commanding a premium of 15 to 20% than their pricing since last year. So the offtake of this SME segment has been very robust, and clearly the supply has also been very limited, because most of the larger office buildings have been made for large corporates and multinational corporations. So the limited supply that was vacant is now getting absorbed very, very quickly, and that makes for a great investment opportunity as well.
All right, you know what? At this point, I want to mention that the JLL RICS survey ranks Mumbai, Pune, and Bengaluru as the top 3 investment markets in the country, and it also says that home sales are picking up. Sunil, I want to come to you on that. 70 to 8 lakh rupee bracket. That's the sweet spot, right? Where are those homes being built? Because I'm sure our viewers would love to know that.
So I think if you look at every market, you would see those places where you would have 70, 80 lakh rupee houses being built. So if you look at, for example, NCR region, you have, sectors 75, 76, 79 in Noida, where this demand is being met by a lot of projects. Similarly, you have similar demand, in Faridabad. You can find this in Gurgaon, Southern Peripheral Road, parts of Manesar, and, areas which are a little, maybe 4 or 5 kilometers off the current peripheral development, Sohna. So you see that demand. You see in Bombay, 1,000 to 800 square feet housing being built in Navi Mumbai. If you go to Kharghar, you will get a 2-bedroom at 70, 80 lakh rupees. So you will have these places. In Bangalore, in fact, you have better options. You can go to Tani Sandra Road, you could go to Whitefield, you could go to Electronic City Road. So every major city has this demand. You can go to Kharadi in Pune, you can go to Hinjewadi, which is lags behind Kharadi at this point in time, but will emerge as a great destination. So you look at across cities, these may not be very prime, but these are well connected suburbs where there is job creation, where there are people who will get a 2-bedroom housing for that pricing. And I think a lot of developers have also focused in that price bracket, because that is the only sector which seems to be selling in these large cities.
All right, but
so I don't think so there is any dearth of that kind of housing.
Any dearth of that kind of housing, 70 to 80 lakh rupees, there'll be no dearth. Amit, you want to comment on that, that 70 to 80 lakh sweet spot, because majority of our viewers would love to get their dream homes in that budget, wouldn't they?
I would say yes, but clearly that mid-income housing or upper mid-income housing has been built for quite some time.
Okay.
What really lagged in terms of availability was really the LIG to lower MIG segment, which is really the sub 50 or between the 20 to 40 lakh bracket.
Okay.
And this is really the push which most of the governments and most of the development companies are now trying to take upon themselves. So which basically means that home designs have become more efficient. You're able to fit 1.5 to 2 BHK in about 650 square feet. People have started looking at minimalistic amenities because they know not everybody is willing to pay for a swimming pool, for multiple squash courts and what have you. They're not willing to, who has the time to actually utilize them and pay for it. So clearly, I think it's becoming more minimalistic than ever. And really, since we mentioned Bangalore as obviously one city which throws a plethora of options within 70 lakhs, we've really seen the offtake to be within the 40 lakh budget.
Okay.
So really, the budgets have tightened a lot more than what they were in the past. Similarly, we've seen good demand in the outer limits of Mumbai, the outer limits, which is really the Boisar and the Vasai Virar belt, the Kalyan belt, etc., where you actually get it within that 50 lakh budget. So it's really the buying of the small consumers, which is more pronounced than ever, than those who are not, those who are anyway looking for affordable and still are, they're really filled with a number of options already.
All right, there you go. On the screens is a chart of Boisar. Those are the average prices of Boisar. On the charts, it's over the period of the last 1 year, average price is down about 6%. 3,104 rupees per square feet is where it currently stands. You've seen a decline of about in the Jan to December 2015 period. That's for Boisar and that's for Vasai. The charts that you're looking at is the average price movement in these localities. This is Vasai, which is down about 9%, over the last, and then that is Tanisandra in Bengaluru as well, about 40% down over there. Amit, do you want to comment on that quickly? Because those numbers don't, exactly represent the full picture, do they?
Well, no, they don't. And I think it's clearly when you're looking at a consumer segment, you're not really looking at appreciation, because appreciation happens more in investor asset classes where people are looking to flip quickly and get out. And if you look at the LIG segment, these are more flattish markets because a lot of stock is coming up. The absorption levels are very, very high. People are keeping the budgets very tight and trading it on a very tight margin. So clearly the upside is not very large because when you're looking at a 2,500 square feet product, you're not expecting it to go to 3,500 because then it takes away the economics of scale and scope from those markets. So they are very range bound and they're obviously therefore end consumer markets, which is really where end consumers are going in a bigger way.
But you are bullish on Bengaluru when it comes to the middle income and the lower middle income markets, right? To put it
of course, I think Bengaluru has bucked the trend. I think it was very comparable with Pune in pricing and developments and layouts. But Pune has obviously got the Mumbai flu and it's taken off in pricing.
I'd agree with you, Amit, on that because the Liasis Fora's numbers that we have, say for the October-December quarter, Pune has not been doing well when it comes to uptick in sales, home sales specifically. Sunil, I wanted to come to you on that. The October-December quarter has not put up a very pretty picture of a buzzing market like Pune.
I think Pune market has seen a lot of oversupply. So if you look at Pune, developers can argue it is a 12-14 month overhang of inventory. Our research shows it is about 18 and 20. So I think if you have a 20-month overhang and you have a city like Pune and there are options and new avenues opening up, yes, the sales have been slow. Bangalore obviously, has a similar dynamics, but somehow or the other, it's been also a good investor market for people who are outside Bengaluru but in the similar Karnataka region. So I think Pune obviously is also getting investors from Bombay but no more. So between the two cities, Pune seems to be a little behind Bangalore, but I think both are excellent destinations for people to buy end homes.
What locations
on
in
an
Pune?
Investor front, I think when people try and confuse end use with, so I think Wagholi, Kharadi, you have Hinjewadi, all of these locations are good. Fursungi, was a great destination. So even people who are traders in the city can look at, Pune in that region. So Pune again has multiple markets. You have Pimpli Nilak, you have Pimpli Chinchwad. So there are a lot of regions within Pune where, let's say, a lot of industrial demand goes to Pimpli Chinchwad, Pimpli Nilak regions, and IT is more about city centric, which is around Wagholi, Pune, Kharadi, and then Hinjewadi. So again, Pune will have regions, and you see Pune also has an old city, so you have areas which are closer to the south of Pune, which are also doing pretty well. So I think Pune has seen a lot of supply, and it's the kind of supply that's hitting Pune. I think that's a slower offtake, but I think Pune still remains a good investment market for private equity players like Amit's firm, etc.
I see Amit smiling over there. Amit, you wanted to come in on that and add something on the Pune market, one of your favorite markets, I must say.
Yeah, I think Pune remains a favorite market, obviously, for people from Mumbai, and generally for funds obviously based out of Mumbai because of its proximity and its enviable affordability to Mumbai. So, but as I said, it has caught the Mumbai flu, where prices are no more affordable, or the attractiveness of Pune has actually dipped. But
what about the industrial areas around Pune, Amit? I mean, those still seem like a good bet, don't they?
And which is exactly the areas which Sunil pointed out. So whether it's Hinjewadi, whether it is Talegaon Chakan, Pimpri Chinchwad, these are really the industrial belts. Kharadi, where we've seen ITS developments, you've seen manufacturing setups. But again, the growth of the sector, whether it's ITS or whether it's manufacturing, has not kept pace with other cities, whether it's even Bangalore for certain, or Chennai, or even Ahmedabad. And I think that's really the reason why the offtake has not been that robust, because clearly the culmination of offtake happens when there is growth happening on either counts, either on education, influx of population, job creation, or higher savings. And Pune has not really offered that opportunity in the last couple of years to finally culminate in sales, while Bengaluru has seen a tremendous amount of offtake on the IT segment.
We've been discussing areas around the micro markets in Pune. We quickly get a check of Bengaluru. In terms of Bengaluru, Amit, where would you be looking at?
Somehow we stay put on the North Bangalore region. In the last 3 transactions we've done, we somehow ended up gravitating towards North Bangalore. I think Manyata Tech Park area, and as Sunil rightly pointed out, Thani Sandra has shown a fantastic growth in values over the last 1 year. So we stay put towards the Hebbal, Yelahanka, Thani Sandra, Manyata Tech Park area. We've also started recently. We've looked at the Hoskote and the northeastern belt also of Bengaluru, because we are quite bullish about the way industrialization is picking up in the northeastern corridor of Bengaluru.
Sunil, you agree with Amit over there in terms of the micro markets is mentioned in Bengaluru?
Yeah. Completely agree with Amit, because I think Bangalore has seen a lot of connectivity issues in the past. So if you were in north of Bangalore, you actually had to, wade, if you call the right word, wade through the traffic and go to Electronic City, and connections were not good. Now, if you look at this whole north belt of Bangalore, you will see that you will move to Electronic City, or Whitefield, or even towards the west of Bangalore in Koramangala via these good connectors and ring roads. So I think today, if you're based in north of Bangalore, you have a value proposition which is still value for money, and you have certain job creation which is coming up in that market. Don't forget that next to the airport there is this whole 5,000-6,000 acre belt which is also emerging as an industrial destination marked towards the electronic, aerocity space and banking sector. So it's too early, but you still have 4 or 5 industries that have come up. There is a big training center by one of the airlines that is being built right now. So north of Bangalore will see more and more traction. That doesn't take the thunder away from markets like Whitefield and etc. But I think Hoskote, as it's a dark horse. You have already Metro, which is halfway down Hoskote, and then you have industrial belt starting all the way up to Kolar, and therefore I think that market is definitely poised for growth. And if I were to bet my money, I would probably put in these markets.
I'm going to kickstart this discussion from here on in terms of a couple of markets I'm very curious about. One is the Hyderabad market. The Hyderabad market, the October-December quarter, for example, the data from Nisus has not painted a very good picture of Hyderabad market. There is no home sales picking up over there. That's the word coming in from those October to December quarter numbers. I'm going to go to Sunil first on this. Sunil, your take on the Hyderabad market?
I think Hyderabad market was in dumps for a long period of time, but if you look at the price rise itself and look at that data in Hyderabad, it's bucked the trend and pricing is almost up by 40% over the last 2 years. Okay. So I think as a market, it's done well because the pricing in Hyderabad at times used to surprise me. So I think it's been a good market. If you look at IDFC as a fund, they have invested in Hyderabad, they've made decent money. So a lot of people who kind of forgot that there is something called a contrarian strategy, and I think also people forgot that buying cheap is one of the fundamental principles of real estate. And I think Hyderabad at some stage was really throwing up good cheap options at the pricing at which if the investor invested and took a little bit of patient call, it's still a 6 million plus city. So there's at some stage a 6 million city will have its own demographic growth of 2.5%, which is still a huge demand. So I think yes, Hyderabad is a favorite still, but I think people looked at in the past 2 years probably made much more money.
All right, at this point, I'm just going to bring in a live caller who's just joining us, Raila Purkar from Mumbai. Please go ahead and ask a query to our viewers.
Hello.
Yes.
Yeah. Who's going to reply this?
We have Amit Goenka of Nisus Financial Services and Sunil Agarwal of RICS. Please go ahead and ask a question. Both of them will answer your question.
Yeah. See, good evening. I'm Raila Purkar.
Yes.
See, I got a flat in sector 48 of Seawoods. It is very close to Palm Beach Road.
Okay.
Actually, I'm a retired government officer.
Okay.
And I'm being shifted to some other place. Since my son and daughter are working in a different place other than Mumbai. So, I just wanted to know whether is it a right time to dispose of, because the thing is that the Seawood station is coming up, the area is being developed. And I heard that L&T is going to take up this thing, and FSI is also being increased. My flat is in a society which is of 16, 17 years old.
Okay.
So what will be the right time? Whether should I go for dispose of, or should I wait for some time, to hold it?
Should I hold or should I sell is the question coming from Mr. Raila Purkar. I'm going to take it to Amit first. Amit, what would be your advice for this query?
So Seawood's project is, I think, finally going to find its glory and pride after being shunned for a number of years. I think L&T has now taken up the mantle of actually going forward with its entire development planning, whether it's a 5-star hotel, whether it's retail, commercial, as well as residential development. I'm also told there's a number of there are a number of ongoing discussions with very large global investors who are now even looking at this micro market for a commercial as well as hospitality and retail play, which would obviously bring a little bit of a global twang and as well as recognition to this area. Clearly, I think Mr. Raila Purkar has mentioned already the facts which are going in favor of that micro market, whether it's a metro, whether it's close to Palm Beach Road, which is obviously an aspirational area. So clearly that area is a hold verdict, but because his property is in an older locality or an older development, and most of the offtake tends to be in a newer development which has got more modern amenities, I don't know whether there will be a significant price rise or impact because of these things on his investment.
Okay, so you're saying it's a good time to sell?
Well, I'm just saying that you could, if you can rent it out because you're moving out, I would rather still wait and hold for some time before pressing a panic button to exit.
Okay, Sunil, your take on this query: hold or sell?
I think one can hold, because if you sell at this point in time, you were not going to get a very significant return. You might, in the euphoria that yes, L&T is developing, but the development is still far off. The other thing I would say is that Mr. Raila Purkar is definitely moving out, and therefore he's got a built asset to his name, and I would not probably recommend that you go and sell this asset and then invest in a newer property and take the risk of development. So even if Mr. Raila Purkar was to sort of sell this off and my recommendation is go into a newer property which actually has been delivered, which doesn't give him a lot of arbitrage. So I would tend to agree, hold on for a while, lease, and then see the pace of project development before you kind of take a call.
Okay, so hold is the unanimous call from both Amit as well as Sunil. On that note, I wanted to discuss the Mumbai market. Mumbai market, license for us is October-December quarter numbers say that inventory is down the most among all metro cities in Mumbai, and home sales has risen the most in Mumbai. I mean, talk to us. Is Mumbai finally on its way back? I'm going to go this with Amit first. Amit.
I don't know. I'm a little cautious about the statistical data at all times, because if you remember exactly 12 months ago, we were saying there's over 1 lakh units available in Mumbai. The absorption is at a dismally low level, and suddenly it's not that 1 lakh units got consumed, and or even half of it got consumed, and therefore the inventory levels have fallen rapidly. Clearly, I think there is a huge amount of oversupply in the markets of Thana, in the markets of Andheri, and clearly in several other markets like Borivali, Kandivali, etc., where prices have actually corrected to some extent. So yes, no doubt, Bombay has finally seen sales happening. So from a very low base of sales, I think sales are up. So if you look at 35% growth, I think it's at a very low base. If you look at it from a peak level, I think it's still down 30-40%.
And there's another number to support that as well, Amit, because SBI, State Bank of India, India's largest lenders, quarterly numbers came out, and they say that their home loan disbursals are up the maximum in Mumbai, Bengaluru, and Pune as well. So there seems to be a little bit of corroboration between the largest numbers and the SBI's quarterly numbers. Sunil, I'm going to come to you on that. Numbers pointing to the fact that Mumbai market has improved considerably, especially over the October to December quarter. Would you agree?
I think let us not forget the basics. And the basics are that Mumbai market has always been the #1 mortgage lenders market in the country for a number of years, even when Mumbai was doing bad. And let us look at Mumbai when Mumbai was down in the dumps, and 1 year ago the inventory was a lack of homes, etc. If you asked any mortgage banker what is the largest city, which is the largest mortgage market, still will be Mumbai or Delhi. So people, when they look at these large cities, tend to ignore that there's a sufficient demographic profile of people who are seeking mortgage finance. And by the way, mortgage finance in Mumbai or Delhi or in any other big city is more loan against properties. So if you look at that data, I would definitely look at that data from a little bit of pinch of salt, because I think a lot of deals that are happening in the market are loans against properties. So I would tend to believe that yes, developers have found better traction, but it's far away from saying that yes, now Mumbai is back and is back in action. Yes, big cities have a tendency to fall big and rise big. So, if you are in Mumbai market and you say that, Bandra Kurla is down and I'm not going to invest in this and I'm going to move away from Mumbai, I think these are all temporary issues. You will have these big cities which will bounce back surely, because smaller cities are not big, getting any better in terms of infrastructure. And I would say that yes, it's a good sign, but I think recovery times in Mumbai's back is still a story that I'll sort of believe if this continues for 1.5 years.
Okay, one thing that's come out with all these numbers is that the average ticket size of the home loan disbursal is about 28 lakh rupees. Amit, tell us, where are those homes being built in Mumbai?
Isn't that supporting my view?
No,
people aren't necessarily buying in Mumbai, and therefore home loan disbursals in Mumbai are still. So actually, if you remember, I talked about the Virar Vasai belt. I talked about affordable housing actually coming up in the deep peripheries of Mumbai. So if you look at Karjat as a market, you've seen huge townships come up. So if you really see, the focus of a lot of the home finance companies is really on that peripheral belt. It's not really, because if you also see as a loan to value, really you're able to go up to 85 to 90% in smaller ticket homes, whereas when it comes to larger ticket homes, you're far more cautious. You're not willing to give more than 65 to 70% of the loan amount. And again, the eligibility criteria becomes a challenge. So clearly the push is really to the sub 50 lakh loans. That's really where also the home finance companies are getting subvention. Your cost of funds are much cheaper. Their margins are much better. So that's really where in Mumbai, if you go to the Vasai Virar belt, the absorption is good. Towards the Boisar and the deep western suburbs, it's good. If you go to beyond Kalyan, it's, including your, so basically, from beyond Thane. Thane is an oversupply, but beyond Thane, I think it's looking reasonably good. So that's really where the markets are it's in the 4,000 rupees to about 6,500 rupee range. And most of these are 600, 650, 700 square feet apartments. And I've seen them, because again, the build out is very large. If you see, most projects out there are about 500 to 1,000 apartments. Unlike Mumbai, where you won't have more than 250, 300 apartments, even in the most largest mill land project, in the city. So clearly, that's really where the volumes as well as the values are going up the most. It's really not the Mumbai city as such.
As such, okay. From Mumbai city, let's head all the way across to the National Capital Region, because we have a caller joining us in from all the way there. Sanjay Yadav from Ghaziabad joining us here on the phone. And Sanjay, thank you so much for being this here on the Urban Debate. Tell us, you've invested in a 2 BHK in Rewari, haven't you?
Yeah, I have bought a 2 BHK flat in.
Yes, please go ahead.
Yeah, I have bought a 2 BHK flat in Bhiwadi in 2016, 2010. And I want to know that whether it is right time to sell it or hold it.
Okay, and your project's name is, if I'm not mistaken, Enorma by Omax, right?
Yeah, Panorama. Yeah.
Okay, Enorma by Omax, you bought it in 2010 in Rewari. Should I hold or sell? Hold or sell, Sunil?
I think it's important to know at what pricing has he really bought this house. What's the pricing, sir, you bought this house at?
Actually, at the rate of bought it around, it's a total cost.
I think
19 lakhs.
19 lakhs you've bought it for.
Yeah.
And how big is the house, sir?
It's around 19 lakhs.
19 lakhs, and the square feet area for the house?
1250.
How much? 1250. Okay. 1250 square feet apartment for 19 lakhs is the word coming in, Sunil?
1200. I think 1250 at this point in time, that project should sell for about 2700 rupees. Okay. And that clearly means that the guy can sell this at about 30 lakh rupees, 30 lakh rupees. Okay. So I would say that, again, Bhiwadi market is seeing a lot of supply. I don't see prices moving up for a long time in that market. Okay. It's still a peripheral market, so one that you can lease that and stay put and have a rental income, because I think if he's bought it at 19 lakhs, you would have a 4-5% rental income on that denominator. But I would recommend that if he looks at a market which is closer to Ghaziabad and starts investing somewhere on the extended corridors of Ghaziabad on NH24 or on the Meerut highway, okay, probably he's going to make a little better return than Bhiwadi.
I see Amit nodding as well. Amit, I'm sure you're in complete agreement with what Sunil is saying.
Yeah, if you look at the math, and I completely concur with Sunil, if you look at the math, I mean, you've obviously almost doubled your money in about 5 or 6 years.
Okay.
If you had taken a home loan on that, obviously your returns would be close to about 250% in the 5 years on your equity, so almost 100% on the value. So clearly, I think the gains have been realized from that micro market. As Sunil rightly mentioned, there's a lot of build out entirely in that peripheral micro market, and the valuation doesn't seem to be looking upward anymore. I think you have to start coming into more infill locations. I think Ghaziabad, Noida extension clearly remain one of those favored markets because the ticket sizes are still small, they're more affordable. Okay. And I think with the entire greater Noida and expressway developments coming up very rapidly, I think there's a little more upside left than what is available.
And the new airport that's set to come.
Absolutely. So I don't see any reason to stay put anymore.
All right. So we have another caller joining us as well, Paras, who's joining us on the phone. And Paras, you want to buy a house in Paldi in Ahmedabad, don't you?
Yes, right. So is it the right time to buy, or price will go down after some time?
But what kind of investment are you looking at, Paras? How big the house that you're looking to buy?
It's close to some 200 square yard, and it's close to Paldi somewhere near Downidar Dera, sir.
Okay. Amit, you've heard him?
Yeah, absolutely. So Ahmedabad clearly is the smart city, one of the first outed smart cities, and obviously on the top 20 of the list announced. Clearly because it's got a lot of attention to it, with a number of initiatives being taken by the central and state government, including potentially a rapid train between Mumbai and Ahmedabad, which if it does happen will actually improve the fortunes of Ahmedabad in a very, very large way. Okay. I don't think prices are coming down in Ahmedabad very soon. Clearly there is a lot of build out that is likely to happen because of GIFT City potentially now becoming a reality in the next few years. A number of large townships have been initiated by very, very large groups. Adani has it, Godrej has it, a number of other people have announced very large townships. So while in general the prices will remain flattish, but I don't see any price correction coming down because land prices are not going to come down anytime soon. Okay. So clearly if you want to buy, I think there's no harm in looking at that micro market.
No harm in looking at the micro market. Sunil, a quick word in from you, your take on Paldi, Ahmedabad.
Paldi is a very established area in Ahmedabad, so I think the caller is actually somebody who's Ahmedabadi and probably looks at the social infrastructure also. So yes, thumbs up on the buy which is there in Paldi. However, I would encourage buyers to also look at, and if it's a pure investment, it's not an end use, one should look at this Gandhinagar Sarkhej highway, because I think a lot of action is going to happen that side of the town. More than Paladi, which is a established micro market, it's not the corridor with a lot of development is going to happen. So I would say shift somewhere, closer to the action. And I think the action unanimously is happening at the Gandhinagar Sarkhej highway. So if you're making a fresh investment, go to a corridor which has much more action.
All right. That is the thumbs up. But you have better options nearby as well, as the word coming from our panelists. On that note, here's a very important programming note here on Magicbricks Now. Coming up on Friday night at 9:30 p.m. is an exclusive concrete dialogue with the Ahmedabad Municipal Commissioner D. Tara, and it's none other than our editor, Faye D'Souza. In conversation with her, make sure you tune in to that important conversation to see how Ahmedabad's set on the road to getting smart. That concrete dialogue, you don't want to miss that one. All right, so that was Ahmedabad. Now I'm going to get back to other markets in the country. I just wanted to check with Amit on the Chennai market. In the scheme of things, Ahmedabad has not done so well in the October-December quarter, but the long range for Ahmedabad still looks very bright. Obviously, Pune is getting too expensive. Bengaluru is still a hot bet. Mumbai seems to be in recovery mode. What about Chennai?
I think Chennai could actually just effectively overtake all these markets if things were to come together for it, because it clearly has all the ingredients for it to succeed. It has, like Sunil mentioned, has been, like Hyderabad, in a very, very deep lull. And but again, because it's closer to Ahmedabad, it's got a port, it's got many other infrastructure amenities and advantages to a landlocked Hyderabad, and because of which it had in the past glory seen a huge amount of manufacturing coming.
But Amit, I'm asking this because we're talking about this Chennai post the floods.
Exactly.
You know what I'm saying?
Exactly. So I think that's what I'm saying. I mean, if that is behind us and we're saying, hey, let God be mercy upon the city. It's a great city. It's done really well for itself in terms of its planning, its development, opening up new corridors, allowing manufacturing. Nokia has been forgiven by the government. So everything is good. Everything is good.
Sunil, I see you smiling as well. Please comment on this.
No, I think, people should learn from the past. And I think if history is any teacher, look at Chennai in years of 2007, 8, 9, 10, 11. And you asked any mortgage banker, he would say that, sorry, Bangalore is not the number 3 market, it is Chennai, where the mortgage offtake is the highest. So I think if you classically look at Chennai, completely agree with Amit that, city has a great potential to sort of give a very, very solid run for money, both to Bangalore and Pune. And I think Chennai has, again, the dual advantage which Pune has, which Bangalore has, that you have manufacturing, you have IT. Again, Chennai is a state capital, so I think, and so is Bangalore. So I think in a lot of ways, Chennai is not dependent on one economic factor, which is IT or manufacturing or services or anything else. So it's a combination which is, helping Chennai to develop across various corridors. Absolutely balanced market, absolutely large balanced market, right demographics, right economic indicators. Right. So I would say, Chennai is definitely going to be an investor's darling.
All right, Chennai is that market that you need to look out for. But we do have another caller joining us on the show as well. Mukul calling us from Mumbai. Mukul, please go ahead and ask a question to our panelists.
Yeah. Good evening. I am Mukul Sinha from Mumbai.
Okay.
I am holding one flat in Noida, in JP.
Okay.
Yeah. Good evening. I am Mukul Sinha from Mumbai.
Yes, I can hear you, Mukul. You have a flat in Noida.
Yeah. I am holding one flat in Noida, JP Cosmos.
Okay.
And I have booked it in 2010.
Okay.
Which so far I could not get the possession. Okay. I am still waiting for that. Now my question is that whether I can sell it off. Is it the right time to dispose these properties?
Okay.
Or I should further hold it on.
Okay. And what is the size of this flat? It's a 3 BHK flat. I'm being told.
Yeah, sure. It is 3 BHK and it is 1,200 square feet.
Okay.
And my purchase cost that time was around 3,000 per square feet.
Okay, and which sector in Noida are we talking about here?
It is in 117. That is
117. Okay.
Cosmos, you know.
Okay. Okay. I'm going to go to Sunil on this first. Sunil, what would be your advice to our caller?
I think, if you have a property in JP today and you find a buyer, you'll be blessed. Because I think the group is fine, it's no secret that it's one of the most heavily leveraged groups across the country. So with a debt of 75,000 crores on the group and this project obviously under stress, I see a very, very, very slow development that's going to happen in JP. Cosmos was a product at the right place at the right time for the right price. So I think, if you look at retrospect, it was a decision that was a good decision. It's got SAR. So if you can find a buyer, please sell off and, get out of this project.
Please
but I think he may have to just wait for a couple of years before he finds a buyer.
Okay. Amit, I'm guessing you don't have a different view on this as well. You completely agree with him as well.
Can't re-emphasize that enough. I think Sunil put it very, very aptly. There was a frenzy for Cosmos Greens. It was the new sector opened up. It was a very beautiful planned development. You can't fault anybody for having actually rushed into it and bought an apartment at that price out there. It was much more economical than going anywhere in Noida for the kind of amenities being offered. But it's absolutely no doubt that it's absolutely not going to take off, in any near future. So clearly, if you can find the money for it, even if it means taking a haircut, I would say, get out of it.
I think the answer is loud and clear. Please exit that project is the word coming in from both our panelists on that note. I just wanted to check on a couple of more things as well. On the National Capital Region market as a whole, Amit, quickly, it's a, at best we can call it a dicey market at this point in time, right?
Yes, absolutely. So it has been the bellwether. It bucked Mumbai as the leader in real estate in terms of market share, both in value and volume terms, especially because of the large-scale development that took off in both Noida and Gurgaon, more in Noida because of large townships erupting. But clearly, they proved to be ghost cities. There weren't enough end consumers. They were more investor-led. A lot of the things that have happened in the recent past, especially the black money bill, the income tax PAN number being attached to every purchase, has really withdrawn the investors. NCR is an investor market. It's not that large a consumer market. I mean, there is migratory population, but they tend to lease out or rent a ready property. Under construction property is not really something which people rush into that rapidly. So clearly it was an investor market, huge sums of money being pumped in, which just suddenly disappeared. Because end consumers aren't there, so they're not coming back any faster.
And you're not going there anytime soon, aren't you? Are you?
I wish. I mean, I've done tons of trades. I would have loved to be in there if that market would shown some resilience. I think it's got a lot of good amenities. I mean, I just look at Noida. I mean, it's such a well laid out city. It's got great roads, great infrastructure, very affordable, but clearly it's not going anywhere. In the near future. I mean, so hopefully if things turn around, would love to go back, but not in the next year or two.
All right. Now, before we wrap things up, we do have another caller joining us on the phone line, this time from Mumbai. Praveen from Mumbai, who wants to understand how the market is looking like in Dombivli. Praveen, please go ahead and ask your question to our panelists.
Thanks, Mr. Kumar. Hi, this is Praveen Pujari here. My question is particularly regarding a project called Palava by Gupta Builders. This is in Dombivli. I wanted to understand just to take your advice, whether this investment is good in this property, and how do we look, in the next 5 years for this project.
Palava by Lora. Sunil, what would be your advice for this particular project?
So I won't have any specific view on that project. On the location, yes, the view is that it's one of the growth corridors, and that should be the right corridor to invest. But sorry, I really don't know anything specific about this project.
So I'll check with Amit on this. Amit, your take on this particular query.
And Mumbai in those markets good. Yeah.
Right. So I agree, Sunil's view that Dombivli in general is looking at the more affordable housing segment coming up from being an old dusty industrial, or SME city. It's now becoming a more livable micro market. But the projects that we're talking of are very large. So the day you want to exit 4 years, 5 years later, and if you have the capability, there'll be 5,000 other people wanting to sell and get out at the same time. So clearly, one is there's a lock-in for you to hold the project till you actually gets delivered. And the moment it gets delivered, there'll be everybody who's an investor. It's been rapidly sold across India, across international markets, and everybody's looking for it to get completed and, for them to flip it out.
All right.
So I don't know what the upside will be at all, if at all any.
All right. On that note, we have completely run out of time here on the Urban Debate. But thank you so much, Amit Goenka of Nisus Financial Services, for taking time out to be with us here on the Urban Debate. And of course, Sunil Agarwal of RICS, all the way from New Delhi. Thank you so much for taking time out to be with us here on the Urban Debate. On that note, it is time to say goodbye. This is Krishna Kumar signing off. But make sure you keep those feedback and suggestions coming in. The email IDs, Twitter IDs, Facebook IDs, all on your screens. We would absolutely love to hear from you. On that note, it's good night.